All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for September 12th. We're almost halfway through September. Boy, time is just going fast for me. But long days just seems to be going fast. Okay, really quickly, I want to ask you guys what's happening in our market right now. What's going on? I think we preferenced it last week. And what's going on in our market? Perfect. I love it. And you're correct. Bounce off the oversold. And I'll agree with that one too. Dead cat bounce. Most likely because usually September, third worst month. October is the worst month in the stock market. I love it. Jeff had a bounce in there, so good. Any idea? Did anyone notice what we started doing on Wednesday? Anyone notice there? Perfect. I knew you'd say that, Alan. Wednesday, we took off bank protection. Can't spell. Protection. Thursday, we took off. What we took off? Thursday, we took off. Can't remember. Friday, took off. Tech protection. And today, took off Ford and Under Armour protection. Dang it, Thursday, what did we take off? Wasn't Boeing. What did we take off Thursday? Banks. Oh, I remember we took off. We took off financials. Financials, which would have been Visa, Square, SPY protection. So we were taking stuff off for our little bounce. Now, we know on the 21st, we have another rate hike. So yes, we are prepared on the next down day to add it all back on. And the neat thing is we did pretty darn good on just about everything. Just about everything we made a good profit on the protection. And I think the best ones were Apple, Meta was pretty good. Bank of America was nice. Baidu was awesome. Good money on that one coming off. JP Morgan we had good money on. And why can I not remember? And Disney. Good money on those. So someone asked, and again, I'm going to say it one more time, but I'm going to go ahead. I'm going to put it down on the education. All right. Yes, the market is ever moving. So we need to position portfolios accordingly. So let me go ahead and let's talk about education. A lot of you came from the education. In fact, the group that I show is our education group. It's a little under half of the money that I manage is our group. And our group today, we did pretty good. Beat the market by 0.4% roughly. We're right there. We're right there. Our cash has gone up to 3.5 million. This is everyone's accounts all put together. This is what we're watching. This is what we do. Simply put, I am for education. And the pros, it teaches, come on, it teaches you how your money can be invested. It forces you to have some skin in the game. What else could I tell you? How do I say this? I'm going to say it protects you from all the can't spell. Come on. From all the garbage that is out there in the investing world. So it keeps you from the weirdos, the people that are full of crap. If you've done any of your own investing, you know just how hard it is, and you understand how it works. But the best thing is it protects you from all those people that are really, they're full of it, right? If they're full of it, you'll know because you've done your education. The bad side to education is this. People think they know it all. And that's when they usually lose their money. They follow fictitious, I can't spell worth beans. Fictitious. Thank you. They follow fictitious newsletters. Come on, Hurley. Trade recommendations. Algorithms. I mean, they do not learn and blame the educator for their lack of effort. And I've talked to people all the time. I mean, it's really, if you truly want to understand all this and understand the market on a level that you feel that you're an expert, you take an education. I went so far as to went and work for the company. So I immersed myself in it for about a year and a half. You paper trade, you run your own money. I mean, it's quite a bit of work. It's a huge amount of work, to be honest with you. It truly was a full-time job for a year and a half. Well, for 2 years. For 2 years to where I had it down. And in all honesty, it's over $100,000 to try different educations to find out that none of it truly works. And I mean, that's just, it can cost a fortune. But I knew that I was going to do this for a job. I just wasn't comfortable doing it for Goldman Sachs or Bank of America, Ameritrade. Certainly wasn't going to do it for Wells Fargo. I was definitely looking for a way to do it better than it's currently being done. In my opinion, the financial industry is about making it's about making those people money, not making you money. Which I should just say, because of this, I spend my Monday evenings and Thursday mornings with you. And that's the education side. I'm here on these nights to help you guys understand what's going on, what we're doing, why we're doing it, and what we see, so you also um, get an understanding of how your money is being managed. Now, 3 comments came in. Also, when I learned that it's more than I can do, so then I have you take over. Thank you, Russ. Alan, uh, obviously you've had some bad experiences, so I'm just going to write it out here. You know, Alan they're all con artists. Yes, I think all education to a certain degree is a con, because if they were really that good, there are hundreds of millions of dollars to be had in the real world of investing and trading. So when you see the garbage out there that's all about, I mean, just numbers that you're like, no way in hell that happened, you are correct. There is no way in hell that happened, and their numbers are garbage. With that said, Options Animal, I watched Greg Jensen take a second and a third out and mortgage his house 2 or 3 times over to keep his company going a couple times, once during COVID, once during the 2008 crash, and things were just awful for him. So I do know there's some integrity there. Kudos to Options Animal and Greg Jensen that made that education work. I like some of the coaches. Some of the coaches, though, back in my day, well, let's just put it this way. Some of them got frustrated because I was showing real accounts and they weren't. And I think that's something that if they're not willing to show real accounts, then it's garbage, right? I have been a fan of Safe Option Strategies and Jeffrey Dunyan. I like his style of telling you how it is. I wish he would show more of his real trading. But again, for integrity wise, Safe Option Strategies and Jeffrey Dunyan, pretty upfront, pretty, hey, here's the way it is, very economical and reasonable. So I know a lot of them are con artists, but there are some good ones out there. If Bill is here today, Bill, let me check to see if you are here. Bill Brandner, where's Brandner at? Bill Brandner is here. He would tell you that the Gorilla Trades guy also, he's a newsletter. He's honest. He's honestly saying, hey, you know what? He's down like 40% this year, 38% this year. And he's honest about it. He's honest and just said, market turned. We had some bullish trades. A couple times he thought we'd bounce back, and he didn't. When we did bounce back, he was putting on the trades for the other way. And he's a guy that sometimes says, hey, no trades. I can't figure it out. No trades. So there's three. There's three, Alan, that I would tell you are not con artists. Safe Option Strategies and Jeffrey Dunyan. Options Animal through Greg Jensen. And the Guerrilla Trades guy. Pretty upfront, honest people on what they're doing. And yes, the last part about education, in fact, you must have talked to Russ there. And William, I mean, you're overseas, so pretty interesting to hear this from Great Britain, right? How do I say? It's more effort. Yes, it's more effort than what people understand when they buy into a program. The biggest problem is they buy into the program, they think they go through it once, that they're going to have it figured out. And it didn't happen in college. In college, you need real work experience. It's just the education side. All that real work experience has to come afterwards. To think you're going to go through education or follow someone's trades on their newsletter, it's garbage. In fact, that's you not learning, William. That's relying on someone else to do the work for you. And that is easily the biggest problem with education is you get roped into thinking if you just follow their newsletter, you're going to get these ridiculous results, and it never happens. So it is a ton of work. And you can ask some of the people that are here. But yes, right now we're taking this little bounce and running. On our first down day, we'll get protection back on. Next Wednesday, which I believe is the 21st, we have the FOMC rate hike, 75 basis points, and that'll probably be the start of our fall down to 3,200. So be prepared for another run down lower, and then we might see ourselves maybe towards the end of October start our run back up. If the market reacts like it has before to the rate hikes, we're going to add a couple extra puts on the way down to try to make up a dollar for dollar on the way down. That will be our goal, is to have us right where we are right now, to be at that same place, if not higher, by the end of October. And we should be able to run into a Christmas rally that'll be instigated by gridlock in Washington. Pretty neat. I enjoyed the big picture. Make sure you go through it. What it really comes down to is what it all means. And what it all means is the stock market was primed for a bounce for a short-term oversold condition. So they wrote 2 pages to say the last sentence. It was an exciting week, but it did not prove anything other than the stock market was primed to bounce from a short-term oversold condition. So if you go back to what I was talking about, all we did is we just took a look at the market, right? And we said, hey, every time we get to these oversold points, we get a bit of a relief, and then it heads back down, right? Bounce right here, little bit, bounce down lower, hit that oversold, came up for 3 or 4 days, bounced lower. Right here, a big oversold, right? Bounced up, down, up. We see it right here. Then it came up a little bit. All we were saying last week is, hey, we're primed for a little bounce up. I didn't think it would pass the 50-day simple moving average. And then we'll probably continue to head down lower. And 3,200 is probably where we're going to be. We might stop at 3,600. But we went over last week exactly what's happening now. And as it happened, we've been taking protection off, and we are ready to add it back on. Most likely, we will add it on with a couple more up days at the 4,200 level because that seems to be a resistance level right now. So you get back up to that 4,200 in the next day or two, our protection will go back on to protect for the FOMC rate meeting that's happening next Wednesday. It will be at least another 0.5%, but from what Powell told us last week, 75 basis points, if not a full pedal to the metal. But the good news is we might get a bounce higher if they say, hey, we're doing 75 basis points and we're done for the year. We're going to let's see how inflation comes back. Or actually, I'm sorry, let's see how inflation lowers itself till the end of the year. So I'd suspect this might be the last rate hike. And if that is the last rate hike, we obviously could see our markets get a little relief rally bounce. But most likely, our relief rally is going to happen beginning in November if the Republicans will take the House or the Senate and just cause, well, they are the Senate right now. Really, if they can take the House, it'll cause gridlock in our government, and the House will be important because they don't fund some of these executive orders. So gridlock for the next 2 years will allow our markets to go higher. All right, let's see here. I'm still expecting a 2% down September, but as we're looking at it, we're actually positive for September, so we'll see where we end up after our rate hike. Earnings this week, not a whole lot. We have Oracle and Adobe. That's it, a couple tech companies. It'll be interesting to see how Adobe is. But this week, tomorrow and Wednesday, we have CPI and PPI numbers, consumer price index and the personal price index. Those are inflation numbers. So it'll be pretty important. We'll probably see a couple down days Tuesday, Wednesday. Retail sales will be a big one on Thursday, as well as industrial production, capacity utilization. They'll probably offset each other. Some of them are expected to be negative, some are expected to be positive. So we'll probably have a mixed bag on Thursday, and down we go. I found a very interesting article on bank stocks. I think Keith talked about this on Thursday as we spoke about it. But Bank of America, Goldman Sachs, and JP Morgan could return about 30% from here. Bank of America is a core holding. We do have some of you in JP Morgan as well. Good opportunity for banks to take advantage of the higher interest rates. A while back, one of you here was like, Kevin, kind of rude, kind of mean to say Ukraine doesn't matter. Our stock market dropped at the beginning of the year because of an invasion from Russia on Ukraine. And I guess it was more towards the middle, right? April. It should have been a non-issue. It does not mean that politically and humanitarian right-wise it's not awful. But Ukraine is 1/10 or 3/10 of 1% of the global economy. Remember, we're supposed to have no wheat and no fertilizer and no this and no that. None of that has happened. Not only that, but Ukraine actually is doing pretty darn good about retaking land and kicking Russians back out to their country. It's amazing that this is a 6-month-old war, right? So we're in September, August, July, June. Yeah, it started in April, right? April, it was the end of the world. Our stock market was going to lose 65% of its value. It's a non-issue. I said it back then. I'm saying it now. It's a non-issue. It is a horrific humanitarian rights issue, but it is not a stock market issue. Please feel free to read through it and see what's going on. An interesting article. I am not the winner of the $1.34 billion Mega Millions. It was in Illinois. If you want it cash up front, it's $780 million. If you want the upfront cash, it's $780 million. But don't forget, you have to pay taxes on that. So a 24% front withholding is 187. Income works out to be 383. It's the welcome to America, the only place where you can win $1,334,000 in a lottery and get paid out about 540. $554 million would be yours, though additional taxes would likely be due. So you win $1,300,000, you're going to get 500 million when it's all said and done, which means what? They take 65% out in taxes. Gotta love it. Gotta love it. Saturday, Marvel and Disney. This is where the growth is. This is the true cash cow for Disney. Are their movies? And boy, do they have a lineup. They've got a lineup of movies here that is absolutely ridiculous. It'll be interesting to see, right, where we end up. Abraham made the comment it'll be a smooth recession. I think the comment is soft landing. I don't know if we've had a soft landing yet, but it is something to think about. And I don't know, if we go into a recession again next year, we're in trouble. It's going to be bad. I found an interesting article. Wall Street's favorite value stocks include a media giant that could surge 55%. This is AQR Capital Management. This is a great example of a crap ton of losers from this company that they're trying to say, hey, we need these to come up. So they wrote an article, Wall Street's favorite value stocks. Most of these are absolute garbage. Disney, upside to average, it's been down 77.7%. It's not Disney. Dish Networks. Again, cables being cut. People are cutting the cables. Not coming back anytime soon. The Newspaper Corp down 55.3%. Not coming back anytime soon. Halliburton's one that could do better, but energy with the lowering prices and not so much. FedEx, not a great company to be in when the cost of fuel is so high. I do agree with Micron. Micron has a lot of upside potential, especially since they make the chips and the position and the motherboards and so forth. DuPont down 30%. Tapestry, consumer cycles. I mean, Tapestry, for all intents and purposes, is retail down 28.7%. Retail is not looking good. Phillips 66 Energy. I would not be in Phillips 66. They are only the selling of the gasoline, not the refinery side of things. United Rentals going to recession. I don't see people spending money on rentals. Bath and Body Works Inc. with Bed Bath and Beyond taking a dive. It doesn't impress me. Welcome to a really crappy portfolio that's been put together. As I went through AQR Capital Management, they're basically down 50% based on a lot of the garbage that they put in for their how do you say it? Their self-run funds that they pick their winners for you. So here they are writing out a sheet saying, hey, these ones could have huge upside because they've been kicking our butt this year. And again, if you look at the fund levels, excuse me, if you're looking at their fund levels on how funds have been running away from these guys, they're in trouble. But anytime you're down 40% in an 8-month period of time, you should expect to be in trouble. All right. Any questions you guys have for me today? Any questions about anything that's on your mind? Questions about what we're doing or how we're doing it? Questions about the thoughts of education or where our stock market is going to be? All these, again, I post on my Hurley Investments, my Hurley Investment singular.com. Please feel free to run out there if you want to listen to them or read all these notes. I post them all out there. But any questions that you guys have? uh, Thank you, William. So thank you for acknowledging. William just said, Kevin, good job on taking some profits and protecting us so we can sleep at night as things are going down. What is your trigger to get those puts back on? And if it's a down day, won't you already be losing before you put them back on? The short answer is yes. But our down day right now, we're doing nothing more than following the market. Plain and simple, our expectation, if we have another good week, we'll probably have a little profit taking on Friday. And our goal will be on Thursday or Friday to start to get our protection back on for the start of the FOMC, the Federal Open Market Committee rate hike. And Powell, it starts next Tuesday. Probably we'll get some, I don't know, some comments. It'll get back into the news on Friday. We'll stew and worry about it all over the weekend. Monday, the market will open up down. Tuesday and Wednesday, we'll get another rate hike of 75 basis points. And to make it simple, we want to be protected for that expected fall. What could change the fall if the Fed says, hey, they're going to hold off and they're done? But expectations are we might have another 50 to 75 basis point hike here in October. They're going to overdo it like they always do, and then they can start cutting or have us better prepared for a recession, most likely coming up next year. So hopefully that answers your question. Are there any other questions? If not, guys, I appreciate you guys being here. Thank you for being here. Spencer, I will see you on Thursday, I hope. And all right, guys, hey, have a wonderful evening. I hope this was helpful. I will talk to David and have these posted relatively quickly so that we can be good to go. And what is that? And short answer is, guys, I hope this is helpful. I do these again for you guys to know what we're looking at, expectations, what to expect for your portfolio. Thank you, Jeff. I appreciate your comments there. And guys, have a great evening. And I think for the record, Thursday we are canceling our Thursday we are canceling the trade findings and adjustments. Keeve is at his wife's grandmother's funeral, and I am occupied on Thursday. So look for that update to come to you sometime tonight or tomorrow that the Thursday 10 a.m. trade findings and adjustments will be canceled. All right, guys. Hey, have a good evening, and I look forward to seeing you next Monday evening. Bye-bye. Oh.